Welcome back to In the Street. My name is Rob, where I provide you with a blue-collar view of a white-collar world where we talk stocks, trades, Wall Street, and all the fun stuff that's in between. Today, we are going to be discussing one of my favorite sleeper hits, I feel, in the market. Now, it's within a sector where when it first started and was proposed, there was a lot of hype, and it drove things up to a pretty big level. But since it was a startup industry, that hype quickly came crashing down because these different companies, being startups, had so much cost and nothing coming in at the time. Therefore, you saw the prices plummet. And I am, of course, talking about the MJ sector, the marijuana and pot stocks. However, we are going to hone in on one today. And it's not the biggest, may not be the baddest, but it certainly has caught my attention. And I'd love to share with you my insight and my outlook for what the company could be. Now, when they first launched, and became public a few years back, they, even in the Canadian sector, were middle of the pack. Okay. And over the course of the past couple years have had some serious growing pains. With that, they had to make some difficult changes and decisions, which ultimately, from the investor who is willing to research and wait it out, realized they were good tactical moves. Now, I am speaking of Hexo Corp. Hexo Corp, up until, well, technically, is still the fourth largest marijuana manufacturer of recreational marijuana in Canada. However, the approach they have taken, they have recently agreed to acquire Zenabis, which now moves them up to that third spot. Now, what makes this company special beyond the other competition within the sector is the model that they are taking moving forward. And it was evident from day one. It was set in stone that we're going to go with a wheel and spoke model. We will provide our brand. We're going to build our brand, the Hexo brand. And we may not be the biggest, baddest of like supply chain of putting product out retail on our own, but we will create partnerships in sectors that they can utilize the science and the substantial product that they have to power those things by Hexo. Now, a couple years ago, they entered into a joint venture with Molson Coors, and this is called Trust Beverages. And this was a huge announcement, because this provided two things. A, it lined them up with a major partnership and in the beverage sector. B, it also helped them slide their foot in the door into U.S. sales. Now, they are not directly selling a lot of product within the U.S., but they definitely now have a major partnership that allows them to start doing that. Now, under Trust Beverages, yes, they do have CBD beverages and things like that being released in Colorado and what have you, but it's a good first step. Now, more recently, I want to say it was towards the end of last month, so it would be March of 21, the new CFO, Trent, he agreed to do an AMA on Reddit to answer questions from some of the investors, what they would have, and it was a pretty long one, and some of the questions were really in depth. I mean, people had, like I got 15 questions, 17 sub questions. I just need to know everything now. And he was, Canadian. He was very nice about it, and he went through and he was answering them left and right. But one of the things he discussed in that is the moving on to another partnership, and they're shopping that right now, and they're negotiating with companies right now, and that's for the CPG side, which is, consumer packaged goods. So we're talking edibles. Now, what he had mentioned is that they're in discussion with, I want to say, 4 Fortune 100 CPG companies to move forward to have a similar partnership like they develop with Molson Coors. Now, what makes this substantial is this is currently, pending the Zenabis acquisition that they currently made. They purchased Zenabis, which increased their foothold even more, but until that's closed out, 4th. All right, so they will be 3rd, but with that, they are continuing to expand. They've acquired overseas licensing and medical opportunities, particularly in Greece and Israel, I believe. But the first thing I'm going to do is I'm going to pull up their 1-year chart to give you a better idea of where it stands, because you can clearly tell within the chart too is all right, what are we looking at here? We got a 1-year chart here. So what you see is obviously since mid of last year, it was just sideways selling, and this is pandemic stuff. They weren't churning profits at all. They weren't even basically they were burning through money at the time, but they made a lot of changes. They made a lot of executive changes, and they restructured within the organization to start cutting back those costs, and it starts showing on the balance sheet. And quarter after quarter, things progressively have been getting better. Now, what you see is as it was approaching the end of the year, these results became a little bit more evident, so there was a little more juice behind it. And then something in February happened. It kind of got wrapped up into the meme movement. People just trying to grab low-priced commodities and jack them up, and it shot up for 2 or 3 days, and hence that crazy peak. But since then, it's progressively gone down. Now, what you see with that is a few things. Now, the MJ sector is not strong right now. A lot of people, particularly big investors, are waiting for more U.S. penetration, right? Which, as you see more states hopping on, like New York legalizing, this past election cycle, you had 4 other states recreationally added. But the thing is, it hasn't created the buzz yet. Plus, the question has always been, they're a Canadian company. What's that mean for the U.S. market? Certainly, it'll help them a little bit, but aren't there U.S. players that are going to dominate that? Why would we care about Hexo? And that's the thing. That's why I go back to saying it's like, their model and base isn't trying to be the biggest and baddest a producer of just all the pot products. They are trying to be the brand that is the partnerships of the pot product, which is truly at this stage in the game probably the most wise decision they could do. And what we saw particularly with the past month or so, I'd say, is just a complete just pullback. I mean, because Hexo itself was hovering around $8, $7, $8, and it's as you could see as of this morning is 584. So to me, what I see is a tremendous buying opportunity. That's what I've been doing. I mean, this is not financial advice. Check the bottom of the screen. I'm not a financial advisor. I'm just here to be the dancing monkey, you know, or the dancing ape. But what I do foresee happening is with this continuation of this model, you will progressively see a company like Hexo expand the market share through these partnerships and divisions. And each year, like I want to say the past 7 quarters, they've had increases, like green increases, which is insane. It's showing the positive move. They're making the right efforts. Now, I also want to pull up one other thing. So when I talk about that spoken wheel model, this was something that was on Motley Fool, and again, take that with a grain of salt. But like, I thought they made a great point, and this person, whoever is speaking in this article, says, you know, if you're looking for the Coca-Cola of pot, here, here's your answer: Hexo. So in 2018, pot stocks were going crazy. Everyone was obsessed with raw production gains. Investors look for, this is a lot of what, I just discussed and talked about. But in reality, they weren't focused so much on the branding, and that's what Hexo has done. So when you go to, buy a new phone, are you looking for the biggest or the baddest all the time? No, a lot of times it's what brand you're comfortable with, Or if you see something come out where it's a new product, but all of a sudden at the bottom it says, produced by Coca-Cola or supplied by Coca, suddenly you take it a lot more seriously. And it's those partnerships and those agreements which are going to make this the difference maker, especially when it goes to expand into the U.S. market. So the last thing I wanted to show on this was, again, from that AMA I just was speaking about before with the CFO, and I kind of highlighted it here. It said, because the question that was asked was, hey, Trent, what sort of approaches and strategies has the organization taken to combat CPG concerns of reputation while negotiating in the sector? Now, the reason this question was posed was they stated that early on, some of the biggest challenges for Hexo to expand beyond just beverage, because like having a deal with Molson Coors is a lot easier than having a deal with, let's say, like a Hershey's or a Nestle. Molson Coors, they sell booze, they sell alcohol, they sell that sort. They're already able to get through a taboo or a stigma. So one of the biggest challenges that was mentioned is, like, early on when negotiating with CPG companies, a lot of them didn't want to do it because they were so concerned about reputation. And that's why the questions pose, what sort of strategies and approaches have been taken. And he even mentions it right in here. He says, it's not been an easy road. Several alcohol... hello. There you guys go. A little free show. It's not been an easy road. Where'd I go? Several alcohol and tobacco companies came in early, but the parallels between industries made it a bit easier for them. Traditional CPG had to wait and see if the stigma of cannabis would dissipate, if reputational risk would decrease, and whether legal and regulatory environments would allow entry in the long run. There was also a lot of expectation around industry size and growth at the outset that had to be proven out, which is more than understandable, especially since these companies were in startup phases and already had partnerships with either tobacco, alcohol or both, and to provide that sector and try to handle this was a lot to ask for a new company. But as you've seen, especially like you look at the states that have legalized recently, the stigma is dropping. So these negotiations are a lot more open, which opens the field for a company like Hexo. So it is my sleeper hit, my sleeper portfolio hit. It's the one I'm just like, I champion it to all my friends, but I would never tell anybody to buy it because that is not my place. I just tell them, hey, I'm buying it because I like it, you know. Aside from that, I hope you guys got a lot out of this. I really have been enjoying doing this. I know it's early on. If there are any suggestions of companies you would like to deep dive or look into and maybe research, go ahead and leave it in the comments below. I'll do my best. Again, blue collar world means the blue collar man works as well outside of this, but I will take the time to look through all of them and try to post a video doing some deep dive research, and we can go from there. Also, if you enjoyed this, please hit the like, drop a comment. It's not just for me, it's for the people on the channel. We will be having more content. You'll see them come in, and I hope we can truly build an in the street community that not only we can be proud of, but that can make you guys proud. Thanks again.